property. As noted in topic 5, where an individual receives income, they are taxed using the nexus tests. With income from business, the benefit comes in because of a course or a flow of business and not from individual service. The business will then pay wages to the people employed. The first issue is to identify whether something is a business, which is not defined in legislation. It may otherwise be income from a hobby or a windfall, because individuals can be in business. A business can be carried on by an individual with an ABN, or by a corporate entity or a trust or a partnership. So we look at the circumstances in each case using section 6.5 and case law. Indicators there is a business are things such as repetition, continuing flow, the intent as determined by the court, the seriousness and commercial approach, system and organisation employed, methods characteristic of the particular line of business that we're talking about, sustained and frequent activity, the type of activity and the type of taxpayer, whether there is a profit-making intent or not. We look at the scale of activities, including the nature and type of capital used and the level of turnover, such as in the case of Walker with the goats. No one indicator is decisive, and some activities are, by their nature, more likely to be pursued as a hobby or recreational purpose, and less likely to be classified as a business, such as income that is brought in from gambling, if they win. There are also other issues about when a business begins and when it has ended. And this is also important for business deductions to be allowed. We then look at the proceeds of the business, that type of income which arrives in. In a few cases, the courts were asked to determine whether proceeds were income or capital in nature or even compensation, such as in the case of GP International Pipe Coaters. In this case, there were two companies and they got a tender for coating pipes for a new pipeline in Western Australia. The government gave them $40 million to cover some of the factory building costs. While that would normally be capital in nature, the High Court held the receipt was within the normal proceeds of the business because the money was received as a result of work which was required to be carried out due to successfully winning the tender, so it was in part of their business income. The next issue is where we have a one-off transaction by a taxpayer who's not running a continuing business. This may be brought in to business income as a one-off transaction or isolated transaction. Again, only a few cases here, but large sums, as you would imagine, are involved. The first is Whitford's Beach, where a company of fishermen who owned a beachfront land, which in fact was an island, sold all their shares to a developer, but the original corporation still owned the actual land. The new owners changed the constitution of the corporation to become a developing corporation, not recreational. The huge profit in selling the lots individually was considered ordinary income and not just the selling of the capital asset being the land. As for income from property generally, that's not land, we look at the assets, which are the tree, which allows income or fruit. Property income is an application of the flow concept of ordinary income. The income is produced from capital ownership that is financial. So we're looking at things like investments. This property brings in types of statutory income, such as interest, dividends, rental and lease for long rent, royalties and annuities. And there is income because of the capital asset below it. So interest from your bank account will actually be income in your hands and is considered ordinary income, not capital in nature. Some specific statutory provisions also look at the taxation of interest, such as where the taxpayer may actually be in the business of lending money, or if the money is compensation in business. Dividends are taxed as they are an intangible right to receive money from a company if you own shares and the directors declare there is a dividend to be paid from profits in a financial year. While rental income is usually ordinary income, lease premiums normally treated as capital because it is the payment by a potential lessee to induce the lessor to enter a lease agreement with the lessee, one-off, and is thus regarded as a receipt for realising an interest in an asset. And royalties are payments from something using your intellectual property and are considered capital in nature generally. And annuities are capital because they are paid as a stream of income for a fixed time or for the life of an individual once purchased. So that is business income and income from capital chattels, other assets, not land.